Hey guys, Sean at eMini School. I want to do a quick video here about multiple time frames and the way that we use them. I know there's a lot of different ways to do multiple time frames, and there's a lot of different ways to trade. Um, but we use a 60, 10, and a 3 minute for our minute charts. Okay, so basically, it's not a magic number. It's you could use a 5 minute, 20 minute, and a 80 minute, as long as you have um, three different directions or three different views, right? Bigger, medium, and small. The 3 and the 10 minute are really just trading inside of the 60 minute. The 60 minute is just trading inside the daily and the weekly, right? So it's all just a way to look at it. And it's very important to look at it in a way that makes sense. So, I see there's, a lot of different ways to trade. And I see some people doing it based off of the way, like, one candle looks on the 60 minute. Um, or, the way two candles look. We don't do that. The way one candle looks on any chart is really kind of irrelevant to that time frame. We don't, one, two bars is not really what we're looking for. We're looking for the overall pattern the bigger chart is giving us. And that pattern could be over a month, 2 weeks, or 3 months. It's not the last 2 hours. Okay, meaning like this bar is above the close of the last bar, so that's bullish. That doesn't mean anything. It just means for the last hour we're up a little bit higher. So here's an example of how we would look at getting targets and how we play the targets on the bigger chart. And it's important to know that on all time frames, the patterns are the same. So there's not a specific pattern we're looking on for one specific time frame. They're all the same. They're just layers on top of each other or within each other, and that's it. Okay, so an example, if you correct this whole wave, okay, there's support at the 6182251. So if that is bigger support, the small time frame, okay, from let's just say this high to this low, or it doesn't mean it has to be exactly on this level. Just say in this zone, right, is where we're looking for it to go. On a small time frame, from this high down into this low, it's going to look like it's in a downtrend, right, on a 3 minute or a 1 minute or whatever it is. And it's true that on a 3 minute chart, they could be in a minor downtrend in a 60-minute correction. Because a 60-minute correction could take, 3 to 7 days. It all depends on how many days it took to get to the last high. So, and in general, you could just say, if it took 10 days, okay, to go from this low to this high, we're looking for a 5-day correction, right? 50% in time. So it just kind of gives you a general idea to look for. So what you're thinking is day 2 or day 3 of this correction, it might not be enough in time for it to just explode again to the upside. And that's also true on a 10-minute and a 3 minute, but it's easier just to count the bars instead of time. Okay, so, and that's where, timing of the market can get very complex. Just have an overall general idea of your thought and kind of have that when you're trading. So you're not really thinking the market's going to explode when it's probably not going to. Okay, it's probably going to stay in the contract or the correction condition. So an example of this, if we have this lower target and then we're looking at a 10-minute. Okay, so here's the 60-minute target. We have it on the 10-minute chart. Okay, so you can have it on your 10-minute. You can just have the number, written down. It doesn't matter. This is how we use the indicator to confirm the levels. Okay, market gaps down, right? It's just tanking right from the open. We get blue bars. We don't really care the emotion of the market. We always follow the blue bars no matter what. Okay, sometimes maybe you're better off to hold the trade. It's not perfect every time, but you can be a better trader if you just obey it every time. Okay, so, and obviously this is a 10-minute chart, so this isn't saying this is the low forever. It's just saying relative to a 10-minute chart, we should correct off of this low. It's not good or high odds to short right here. Okay, so, and I always look at this. I know some people show things like this and say, you know, if you were short from here, you would have made 50 points down and it caught the exit and you would have made 50 points. Forget about that side of the story for right now. Let's say you're just flat. Market opens and it's running down. You're going to feel like you're missing it and you're just going to look for a reason to get in short because it's obviously going down. So if you are flat going into this low and you have blue bars and you start trailing mentally as if you were in a short trade, you would start trailing the stop down and you would have been taken out right here on your stop if you were short. Well, if you were just taken out on your stop if you were short, there would be no reason to just enter right away. You would just be getting out of your trade. Okay, so we're not trying to manipulate it just for our quick benefit. We're looking at the bigger picture so we can gain odds on really what's happening. Okay, so at that point, we know this isn't a level to short based off two things: 60-minute support, 10-minute blue bars. There's two things there. So an aggressive trader would take it as a reversal area, okay, to actually take it long. It is a buy area on a 60-minute chart, okay, but that doesn't necessarily mean right when it's hit, you're just going to go long a 10-minute or a 3-minute. There are specific patterns we wait for, and you can break it down to a scalper as well. A lot of people do that. And a lot of the traders that have been with us for a long time, they would just take it long down here because they have faith in the blue bars. So, you know, everyone can trade this a little bit different. There's not a specific way. There is a specific way how we come to the conclusion of what not to do. Okay, then there's multiple ways to actually execute the trade or enter. Some people only use a scalper, some people enter off the 10-minute, and some people enter off the 3-minute. It's important though, the direction is always going to be the same. It's just breaking it down to your specific entry because your risk might be a little bit higher or lower than someone else's, how much you're willing to take on the trade. So an example of a way to break this down is if you have high odds of this low based off of two things, then you can have confidence that you should only, for starters, you're not going to go short. So you're not thinking short or long. You're really focused on give me a reason to be long here because a 60-minute support is much more important than the 3-minute looking like it's going to roll back over after it pops up 2 points, right? Okay, so if you break it down to like the scalper, this is the NQ. You know, there wasn't a whole lot of, well, actually, it's this low right here, so you could see on a 6 range, this is kind of a good example. On a small time frame, the trend is down into where? That's the most important question because most traders are missing and then they feel like they're late or they're missing all of this so they have to get in, but they're really getting in late at a bigger support. Okay, so how we do it is we wait for a bearish pattern to hold, okay, to turn the market. We're not trying to pick this low right here. Okay, basically once we take out this high right here, and this is a 6 range chart, okay, 60-minute support, 10-minute blue bars over here. So we have high odds of this low holding. So we're looking for a reason to be long. This would be the first reason to be long right here. So we're not trying to pick it right here. It's too emotional. It's too hard to repeat this exact trade over and over. It's extremely hard because the wave down doesn't always look the same. Just so happened we gapped down to it so it looked worse than it was. But it still is the level no matter if it gaps or it doesn't. Got to get that emotion of it. Oh, it's gapped. This thing is going to tank. Get it out of your mind. You'll end up shorting the low. And then probably short it again once it pops up a little bit more. And you're really not focused on the correct direction of pattern direction plus, the indicator direction. But So this right here would be first entry, okay? Stops would be below structure here. You know, some people even play it stops here. You can see it didn't really matter which one you did because neither one would have been stopped. Okay, so that would be first entry off pattern. Okay, second entry off pattern indicator here. And the third entry would be here. This one's a little bit higher risk. This is the best trade right here. So let's say you're trading 5 lots. This would be more of like a 3 lot. This would be a 5 lot trade right here. You would want to be in your full position. But notice how the best trade is over here. Okay, let's say 10:30. The low was over here at 7. That's 3 hours later. Okay, and that's where understanding that we're at a bigger level, you know, looking at this chart, it looks like we just came down and then straight back up. But in reality, we didn't. It chops around for a while. And that's where, you know, the market going down into a level, a buy level, doesn't mean it's a buy right there. As far as if you are day trading it or scalping it. This is really the turn pattern over here. This whole thing from here all the way over to here. And that's where 1 or 2 bars doesn't really matter. It's all of these bars together, okay, give us the confidence to take it here, okay, plus this level, plus the 10-minute blue bars. But it's really waiting for something to happen as a whole, not just 1 or 2 bars to try to front run the idea or the thought to do something. So hopefully this helps on how we use multiple time frames. And really, I always say it's the second question that's really the most important part of trading. If the first question is where is it going right now, and you can see that it's going down, that's kind of obvious. It's really the second question, when does that end? Okay, and that's how the multiple time frames gives us the answer to the second question, which is much more important. So hopefully this helps. See you guys in the next video.